New fund, new risk, same investor mistakes. So today we test MAGY, M-A-G-Y, before the market does. MAGY is brand new, which means there's no long track record, no comfort blanket, and no hindsight. Just yield, strategy, and expectations. So instead of guessing where this fund might go, today we're doing the only thing investors can do with new income ETF. We're stress testing the strategy, modeling the distributions, and running early backtest to understand what an all-in investor is actually betting on. This isn't about hype, it's about figuring out what MAGY needs to do just to work. So stay tuned. Welcome back to Simply Money. If you're new to our channel, thank you for joining us. Today we're looking at MAGY, M-A-G-Y. We're going to be looking at an all-in scenario. We do this on all sorts of different funds where we take my income portfolio and we throw it in hypothetically. What would it have done if we had gone all in on a particular fund? Today we're checking out MAGY. This is a very new fund, been around since May of 2025, so not even a year of data to show you here. But we are going to backtest it and show you the trends that it did on 2025. We'll check out what it looks like with a full drip, 50% drip, and no drip as usual. And then we'll do a variable drip at the end. We're going to see how this fund has performed. You don't want to miss this. Make sure you stay tuned to the end to see what the total returns are and compare that to these other funds that we've looked at. If you want to check out the other funds, you can go to the link on the channel and you can find those in the playlist of the all-in scenario playlist. This spreadsheet is the MAGY drip. If you like these spreadsheets, you can get a copy down at the Buy Me a Coffee link in the description below. Your support helps us produce more videos and get more information out to others. The best way you can support us, as always, is hit that like and subscribe button and share this on your social media with others. It really helps us, and we appreciate it more than you know. This is for information and educational purposes only. I'm not a financial advisor. This is not financial advice. I'm not telling you to buy MAGY. I'm not telling you to go all in on MAGY. And I'm not telling you to go all in on any fund. In fact, I highly recommend not going all in. Never put all your eggs in one basket. That's my advice, but you are going to have to make your own decisions, do your own due diligence. So let's dive into MAGY. May 9th, 2025, we had a $54.63 share price. This is a weekly payer, so we'll see these compounding quickly. With that and our $525,000 hypothetical scenario here, if I had bought all MAGY with my funds, I would have got 9,610 shares. Let's see what this would have done. Now in May, we were at $54.63. You can see that it's fluctuated a little bit, but it stayed right in there all the way through August. Got up to about $57 here in September, and then it started sliding, got down to $54 in October, bounced back up to $57 at the end of October. November was a little rough, got down to $53. Again, it's bounced up a little bit, but right now, as of January 16th, it is sitting at $51.56. So it has seen some decline of late, but again, this is short term. Investing is a long-term plan. So please take all that with a grain of salt that you are looking at long-term when you're investing, and some of these funds are so new we don't have that long-term track record. How is it done on the distributions? Column C here, you can see it started out paying right at 48 cents. We dropped down here to 27 cents and then back up into 38 cents range. It's pretty much been in that mid 30-cent range ever since July 4th. For the last half of the year, it's been pretty consistent in the mid 30-cent range, 36, 37, 38 cents for the most part. Over the course of this period, it has averaged 36 cents. Now, looking at the share price back here in column B, you can see the share price in this time frame has dropped a negative 5.5%, 5.62%. The share price has dropped. That could go back up tomorrow. That could go down further. This is, again, a short time frame, so we're just watching that, and we'll keep monitoring that. Now, with a full drip, meaning we buy more shares with whatever distribution we get. So they send the distribution on May 16th of $4,600. We buy more shares. You can see over here in column G that we had 96.10 on the shares. Now we have 96.92. We bought 82 more shares with our first distribution. We keep doing that. So because we're doing that, our shares are climbing and our distribution will climb. Obviously, it went down when the distribution was almost half of what it was the first couple weeks. It's down to 2,600. But as we scroll down here to the end, you can see each week you've been getting pretty consistent $4,000, got up to 4,400, but it's been averaging right in here about 42, 43, 42, all week over week over week, getting these consistent payments. That's $16,000, $17,000 a month that was being paid out in this. You got $142,000 in just over, about 8 months time frame. So very good distribution. You've bought more shares with all of that. So you got 2,564 more shares throughout this scenario. And that's where we end with the full drip. Now with 50% drip, we get half of it and we buy more shares in column H. We also get half that we're collecting for cash, doing what you want with it. So remember this column here, you get this $2,304 for reinvesting. You also get $2,304 for cash. So you get that amount in column E, whatever's here, you're getting that twice. I know some people get confused on that. I'm going to keep clarifying. As long as I get comments on it, I will continue to clarify it. While I'm here, let's stop and pause. Do you like MAGY? Do you own MAGY? What are your thoughts on MAGY? Has it performed well for you if you do own it? What do you think you're going to do with it in the future? What's your outlook on MAGY? Let's share in the community a lot of different thoughts. Do you think 2026 is going to be a good market for MAGY, or is it going to suffer? Are you planning on buying it and holding it? Are you dripping, not dripping? Let's share all those comments with one another, help each other, and continue to build this community. I appreciate all your comments and support. As you can see, the distributions, again, have stayed pretty consistent. You're getting these almost $2,000 distributions each week, buying more shares. So over this time frame, you've collected $67,000. You've bought 1,200 more shares as well. That brings us to the zero drip. You're taking the distribution. You'll get this 9,610 shares at the beginning. You'll not buy any more. You'll just collect the distribution and go from there. Do with it what you want. We're simulating that you are using this for income. So you can see the first payments were nice, $4,600 a week. Then it dropped down to about $2,600 for a few weeks, and then it got up into the mid 3,000 range, and has stayed there pretty consistent for all these months. Since around July, we've just seen that $3,600 a week, almost consistently right at that, give or take a couple $100. So you're looking at $13,000 a month of taking income immediately. If you had done that, you would have already collected $126,000. Now, you haven't bought any more shares because we're just collecting and taking all the distribution. So how is our market value held up in each of these scenarios? With the full drip, you can see as we come down here to the bottom, the full drip has gained $102,000. That's a nice, healthy growth. You've reinvested the distribution. So even though you had a 5.62% share price drop, you've gained 2,564 shares, and your value has gone up $102,000, a gain of about 19.5%. Not bad in 7 months. For the 50% drip, we gained only about $32,000, or 6.25% gain, but we also collected $67,000 of income. Column K is where we need to start looking. Okay, you had a share price decline. You were taking this $126,000 of distribution and spending it, but your market value has dropped 5.62%, or $29,000. So you're sitting at $495,000. Again, you've collected a pretty healthy distribution in that time frame, though. So let's look at what is the total return. Remember, with total return, you have to take both the market share gain and the distributions and add those together to get your total return. Because even though you're taking distributions, that is part of your return. With the full drip, it's at 19.56%. You gained $102,000 in market share value, but you did not keep any of the income. So that is the only gain you have, is that $102,000. right under 20% in 7 months. Again, very healthy. Now, if you've been 50-50 on the drip, you had the $32,000 gain in value, and you took the $67,000 of distributions for cash. That's a total of just under $100,000 or 19.02%. Again, very healthy, nothing wrong with that. If you had put in this and said, I want all the distribution for living, or I'm going to invest somewhere else, you drop just under $30,000 of value, but you gained $126,000 in distribution. You subtract this loss from this distribution, that gives you a total $97,000 return or 18.5%. Again, very healthy. Nothing wrong with that, especially if you're taking income. Again, you have to make a determination if you own this, how you want to go about that. And I know some people think, oh, $525,000, we can't do that. So we always go down and do a smaller amount. You can see the dollar amounts here, they change. The percentages won't change. That's the thing I always try to tell people when they don't like the full amount that I'm using. Put in whatever amount you want, but if you want to just look at percentage, that doesn't change. The only thing that changes is the dollar amount based on the amount you're beginning with. So we're using this to say consistent across the board with all the funds that we're comparing on these all-in scenarios. Now over here, what we do is you can put in a percentage that you want to drip. And we do that because if this, as you can see with no drip, dropped $30,000, if we want to maintain our balance, we need to figure out how much do we need to drip in order to maintain the balance. And then what does that leave us for taking home for our distribution? Right now I have it set at 70% drip, 30% take home. And at the end of this, we're up $60,000. So maybe you're fine with that and would say, yeah, let's keep it at that. Or if you wanted to go down a little bit, we could go to 60% and see where we land with that. Updates everything. We come down here. And so we're up $46,000. So again, not bad. Let's go down a little bit further here. Let's go to 40%, see where we fall here. So we're going to drip 40% and keep 60%. And now we had a gain of about $20,000. So let's just stick with that and look at the numbers. As you can see with this, you'd be dripping 40%, so about $1,800 to begin with, and it goes down to about $1,500 on a consistent basis. You're buying more shares, so at a 40% drip, you still gain 956 shares, and you took $53,000 and reinvested it. But meanwhile, you've been able to take home $79,000 of income, and you've increased your portfolio 3.77% or $19,000. So this gives you the ability to play with this a little bit and see what you want to do. Some of the funds, they have share price appreciation even with zero drip. So you might want to do a percentage here just to see how much you want to take home, because perhaps you only need $2,700 or $2,000. So you play with this to get that set and see how much your fund would grow and etc. So that is the reason we have this variable over here. This is MAGY. Again, it's a new fund. There's a lot of speculation with it. A lot we don't know. We're going to have to watch it. Like with all the funds, we'll continue to do updates periodically as more data comes out, as we go through different market cycles. If we get a bull market, we get a bear market, if we get a full-fledged recession, whatever the case might be, we'll continue to do updates and see how these various funds react and how they perform. So this is MAGY. Throw me your thoughts down below. I appreciate you joining me, and we'll see you next time on Simply Money.